Analyzing central bank announcements is one of the most critical aspects of Forex trading. Understanding these announcements can mean the difference between a successful trade and a missed opportunity. In this video, we're going to dive deep into the best approaches for analyzing central bank announcements and how you can leverage these insights to improve your trading strategy. Central banks play a significant role in the global economy, and their decisions can have a profound impact on currency values. These banks, such as the Federal Reserve, European Central Bank, and Bank of Japan, set interest rates and manage monetary policy. When they make announcements, the Forex market listens closely. But how do you make sense of these announcements? And more importantly, how do you use this information to your advantage in trading? The first thing to understand is that central bank announcements are usually centered around interest rates. Interest rates are a key tool that central banks use to control inflation and stimulate or cool down the economy. When a central bank raises interest rates, it's typically a sign that the economy is strong, and this often leads to an appreciation of the currency. On the other hand, when a central bank lowers interest rates, it's usually trying to stimulate economic growth, which can lead to a depreciation of the currency. Now, the key is not just to know what the central bank is doing, but to anticipate it. Successful traders don't just react to the news. They position themselves ahead of time based on their expectations. This is where understanding the context of the announcement comes in. Look at recent economic data, such as employment figures, inflation rates, and GDP growth. These indicators give clues about what the central bank might do next. For instance, if inflation is rising rapidly, there might be pressure on the central bank to raise interest rates to cool down the economy. Conversely, if economic growth is sluggish, the bank might lower rates to encourage borrowing and investment. But here's the thing. Markets often move before the actual announcement is made. This is because traders try to predict the outcome and position themselves accordingly. So, how do you stay ahead? One approach is to follow the speeches and statements made by central bank officials leading up to the announcement. These can provide hints about what the bank is thinking and what they might do next. Moreover, it's essential to understand that the market's reaction to a central bank announcement is not always straightforward. Sometimes, even if a central bank raises interest rates, the currency might fall. Why? Because the market might have already priced in the rate hike, and traders might be focusing on other aspects of the announcement, such as the central bank's outlook for the future. This is where sentiment analysis comes into play. Sentiment analysis involves gauging the mood of the market, whether traders are feeling optimistic or pessimistic about a currency. One way to do this is by looking at technical indicators that show overbought or oversold conditions, which can signal when the market might reverse. Now, analyzing central bank announcements can be complex, but this is where tools like the FX Limit Apex Trend Indicator come in handy. This indicator is designed to help you identify trends in the Forex market, making it easier to spot profitable opportunities. Imagine knowing not just what the central bank is likely to do, but also how the market is responding in real time. The Apex Trend Indicator scans multiple timeframes and currency pairs, providing clear buy and sell signals based on advanced algorithms. These signals can give you an edge in predicting how the market will react to central bank news. Let's say the Federal Reserve is expected to announce an interest rate hike. With the Apex Trend Indicator, you can monitor the USD pairs closely. The indicator will show you whether the trend is bullish or bearish, helping you decide whether to go long or short on the dollar. And since the indicator provides non-repainting signals, you can trust that the data you're seeing is reliable, helping you make more informed decisions. In addition to interest rates, central bank announcements often include other crucial information, such as forward guidance. Forward guidance refers to the bank's future policy intentions. For example, even if a central bank doesn't change interest rates, It might signal that rate hikes are coming soon, which can still move the market. Again, the key is to be prepared for these scenarios and to use tools like the Apex Trend Indicator to confirm your analysis. Another important factor to consider is the overall risk sentiment in the market. Sometimes, central bank announcements can trigger risk-on or risk-off moves. In a risk-on environment, traders are more willing to invest in higher-yielding, riskier assets, which can drive certain currencies higher. In a risk-off environment, investors flock to safe haven currencies like the USD or JPY. Understanding the broader market sentiment can help you align your trades with the prevailing trends. So, what should you do right before a central bank announcement? First, ensure that your analysis is solid. Review the latest economic data, listen to any hints from central bank officials, and consider the current market sentiment. Then, use a tool like the Apex Trend Indicator to confirm the trend direction. If the indicator shows a strong trend in line with your analysis, you can feel more confident in your trade. Finally, remember that central bank announcements often lead to increased volatility. While volatility can create opportunities, it also increases risk. Make sure you have a risk management plan in place. This includes setting stop losses and take profits at levels that protect your capital while allowing for the potential rewards. In summary, analyzing central bank announcements is all about understanding the context, anticipating the bank's actions, and positioning yourself accordingly. With the right approach and tools like the FX Limit Apex Trend Indicator, you can navigate these market-moving events with greater confidence and precision. Thanks for watching, and if you found this video helpful, don't forget to subscribe to FX Limit for more insights and strategies to boost your Forex trading game. Happy trading!